I think we've got a great panel here. We've got a good variety, everything from sort of early stage investing to a little bit later stage to corporate VC as well. So I look forward to hearing sort of the different viewpoints on the space from each of our participants. So with that, I'd like to turn it over to our panel. I'm going to have them each give a little bit of their background, how they invest, sort of the size and stage, as well as just anything specific in RegTech, any key focus areas. So with that, Daniel.
Thanks so much, Greg. My name is Daniel Kim. I'm one of the 3 partners of Bergal Sagemount. My group and I really had our origins in a division of Goldman Sachs, investing the firm's balance sheet into recurring revenue businesses in the technology sector. So in 2012, we raised $500 million, left our old firm, and continue on that strategy. Today, our portfolio is around 24 companies. We've since raised a second $960 million equity fund. And really, the core focus for us is slightly broader than just RegTech. We focus on businesses that have enduring value to their customers that come in the form of recurring contracts. So things like whether they're data center companies, enterprise software, or payments, they all kind of fit into our underwriting framework of how we think about how to value a company. We generally invest kind of $30 million to $150, and half of our deals are controllable, the other half are growth stage. So we're really excited to be here today and talk about RegTech.
Excellent. Alex?
Thanks. My name is Alex Akery. I'm one of the managing directors and also the general counsel of an early stage venture capital firm based in the Washington, D.C. area. We are focused on helping entrepreneurs at the very earliest stages in highly regulated industries with a real focus on financial services, kind of broadly construed. So that, for us, very much includes technologies that can help both existing kind of incumbent financial institutions, but also new and promising fintech companies with their regulatory burdens. We tend to invest on the smaller end, much smaller than Daniel, but up to $2 million generally, sometimes a little bit more. In the seed and Series A stages of RegTech and fintech companies, and then typically follow on after that. Gary?
Hi, I'm Gary Offner. I'm manage strategic investments at NASDAQ. NASDAQ Ventures, typically we're taking minority growth capital investments with businesses that have some strategic nexus with NASDAQ where we can add value beyond just the capital, either as a distribution partner, or in some cases, the company might be a customer of NASDAQ's. My background is that before NASDAQ, I ran strategic investments for Morgan Stanley's equity division for almost 11 years and worked on a number of prominent sell-side consortia and market structure investments during that time. And before that, I actually was at a venture capital fund for 8 years doing enterprise software deals. We are stage agnostic. We are looking for things that are synergistic with NASDAQ's existing businesses, where it's really a win-win for our portfolio company and its management team and for NASDAQ, where we can create a virtuous feedback loop, either by bringing customers knowledge, the credibility of NASDAQ's brand, our global distribution footprint, in a way that can unlock value and be transformative.
Just a quick question, Gary. When you guys make an investment, does it have to have an immediate strategic, do you have to have sort of immediate strategic agreement, sort of opportunity with that investment? Or is it something you think could be interesting and maybe down the road it could be NASDAQ could be a client of that company?
There does not have to be a commercial agreement of some kind is not a prerequisite for an investment, although the potential for such an agreement or partnership is. So it's really more about just, is the management team compatible? Do we see a real use case where we can add value beyond just the investment dollars? And also, in some instances, part of what we're doing is crowdsourcing innovation. So there's no organization that has a monopoly on innovation, right? So there's so much happening at the grassroots level. There's so much entrepreneurship that this is a way for us also to just keep tabs on what's happening and potentially help the ecosystem evolve in a constructive manner.
Great, great. so the first question is RegTech, is this a hot space for you guys? Are you seeing lots of deal flow, lots of interesting investment opportunities, or is it just kind of one of many different areas, and maybe there's some other things that are hotter? Daniel, why don't we start
Sure,
with you?
absolutely. I mean, one of the interesting things that, from a perspective of how we look at regulation technology, we do view the products and solutions we're seeing that are emerging as very much insurance products. So as opposed to a lot of enterprise software that we look at, where there's a very hard ROI, you've got to have a sales guy doing all these spreadsheets to figure out what the return is. With some emerging sectors of regulatory compliance, you can't operate your business unless you have something. And the regulators, if they penalize a company and they have something in place, that almost prevents these gigantic lawsuits that you see hit the newsstands. So we made an investment in a sector called Steel Compliance, which is one of the leading vendors of software and investigation services for anti-bribery and anti-corruption. Now that is a relatively emerging space if you look at kind of AML and financial compliance, but it's an area that's getting a lot of board level support. And we're seeing not just in ABAC, but also in a lot of other areas of compliance. And so the fact that there's a lot more focus on it from a board perspective, there's a lot of budget, and there's a lot of unknowns out there, make it a very exciting time to invest into it.
Cool. Alex, any thoughts?
Yeah, I would echo everything Daniel said there. I mean, we've seen just a really significant increase in the number of enterprise and SaaS technology companies focused on RegTech in the last 18 months. And what's one kind of interesting thing from my standpoint is just how globally dispersed these companies are. This is not a US-only phenomenon, and indeed, actually some of the best RegTech companies and most promising ones are finding strong footholds in Europe and in Asia and in Australia. And so it's been very much almost in some ways, a little bit more even in some ways than the early days of fintech. It's been
Any specific reason for that? Is it regulatory regimes or something else?
I mean, I think vis-a-vis the UK and Western Europe, there's been a lot of there's still in kind of what I would consider to be an increasing kind of regulatory environment vis-a-vis the United States, at least relative to the United States. And so with GDPR and MiFID and PSD2 and all these acronyms, it's brought a lot of awareness to the regulatory burdens, and I think that's also provided a little bit more to the in terms of the demand side and made it more of a priority on the buying side. The other thing I would say is that I think the UK in particular and Ireland and others in Western Europe have done a really good job of encouraging innovation in terms of RegTech and regulatory technology, and have had very much of an open door and supportive environment to help build an ecosystem there.
Excellent, excellent. Gary, is it a hot space for you?
It's a significant area of focus for us. We ourselves are obviously a regulated entity. We have one of the leading trade surveillance platforms, if not the leading trade surveillance platforms in Smarts, which is sort of embedded distribution for a RegTech product suite. There's clearly a huge need for automation solutions, the use of AI, machine learning, natural language processing to solve all sorts of shared pain points, certainly in financial services. It's not really an area that I think provides any real competitive advantage for any bank, but it's more of a shared pain point.
Yep.
Right now, I would say there's a huge mismatch between the need for comprehensive solutions and the state of technology today, which is mostly around point solutions, the need to graduate from point solutions to a comprehensive solution to address what is the true market need and demand, and unlock the demand. So.
Excellent. Yeah, that kind of leads to what I was going to hit on next, or sort of what are the challenges and the problems you see in the space, whether it's for the companies themselves or from the investor viewpoint. Daniel, any thoughts there?
Yeah, I'd certainly echo the challenges of, you have a lot of large framework vendors that have access to the decision-making organs of these companies, but then if you look at those solutions just in a vacuum, they don't exactly address the immediate pain and insurance point that I think a lot of boards want to address. So I think from an investment perspective, our challenge is to find those areas of regulatory compliance that are emerging, but have a clear winner or some clear technology that allows that company or group of companies to establish effectively a platform in a niche that over the next few years can dominate that one niche and hopefully get integrated up into a larger framework. So that's another reason why we like regulatory compliance, is that just from a pure numbers perspective, it's a highly consolidating industry, which means that on the buy side, when we're investing, we see the ability to consolidate smaller platforms into mid-sized ones. And then on the exit, there's obviously larger framework vendors that want that functionality and want to leverage their channel to sell those solutions as well.
Excellent. Alex, any?
Yeah, I agree with that. I think at the early stage where we typically invest, it's a very difficult balance between trying to have a scope and a business, product suite that is kind of narrowly tailored enough to actually be executed on with limited capital, but also provides the opportunity for whether itself growing into a platform or trying to build out into a framework, or being able to integrate with others. But I think in terms of the challenges, it really is about, for these early stage companies, about finding that the first 3 or 4 customers, proving that the sales is repeatable, and being able to do that on a unlimited budget with folks like us, breathing down their necks to get it done. So I think sales and procurement probably the biggest challenge, and then defining the product both narrowly and wide and broadly enough to be commercially successful.
So if we, come back here 5 years from now, obviously there's a lot of smaller point solutions that are finding pretty good success, and the industry is likely to consolidate. Who ultimately sort of owns and wins the space? Is it the consultants? Is it large integrated software companies? Is it something else? Anybody want to opine on that? As to the ultimate winners?
Well, I could say what the characteristics of a winner will be. It might start as somebody with a point solution that's solving a specific problem whereby they've established a beachhead, but then that solution enables them to land and expand within the enterprise, and not just within the enterprise, but then a network effect pull through so they can start solving problems not just for the enterprise, but for that enterprise's supply chain partners. So that implies a cloud solution, a SaaS model, recurring revenues, getting to self-funding, and scaling quickly. So those would be the attributes of a winner in the RegTech space. Translating that into which point solutions provider is actually going to fulfill on that vision is a challenge. That's what we're looking for every day. So if anybody has that business plan, please give us a call.
Cool. What about an industry sort of consortium? It seems like a space, everybody's got the same pain points, they all have to do the same, whether it's AML, KYC, whatever it is. It seems like a space where you could have something like an early warning potentially be created. First of all, are you seeing anything like that? And do you see that as sort of viable in this space broadly?
Sure, I can answer part of that. So Steel Compliance, part of their business model is to verify and make sure that third-party vendors are following financial and anti-bribery compliance laws. Now, a lot of our Fortune 500 companies are doing the same diligence on the same vendors, same principles, but the challenge is that a lot of people have different risk models. So what might be a very high risk for Coca-Cola, maybe like totally different for Procter & Gamble. So I think there's certainly some shared data points that you could probably build a database around for specific principles and vendors in that space. But because the risk models are different, finding a way to leverage the work has been a challenge. We do have an AI product that is putting together profiles in the background that we're hoping will lead to a commercial product as kind of a beachhead, but we still haven't answered that main point that everyone's risk model is slightly different.
Anybody have a different view?
I think it's going to be a really big area for collaboration. You're already seeing there's been some initiatives on third-party vendor management. There's a lot of discussion around data sharing for financial crimes. To Gary's point, a lot of folks, a lot of companies, I think, will perceive these compliance burdens and compliance opportunities not so much as opportunities to compete, but to collaborate and reduce costs kind of industry-wide. And I think the regulators will be supportive of that. There are, of course, those limitations even in existing legal and regulatory structure that kind of do provide some friction for collaboration in these areas. For example, like on the data sharing on financial crimes, and that's an area where industry needs to, I think, continue to work with regulators to try to find solutions that will permit of more collaboration.
There's been a lot of sell-side consortia over the years, but and I had the opportunity to work on a number of them in my former life, and what you find historically is that it's usually the front office. You're usually talking about guys who are used to taking risk, who are running trading desks, for whom the consortia is a small ticket, and it's a twofer. They're going to potentially make money on the investment, but they're also going to save money on their trading costs or something of this nature. And the challenge with doing consortia in the back office or the mid office has been the different constituency. I'm talking about financial services now. Different constituency at the bank. They're facing asymmetric risk to the downside if something blows up, and their job is to make sure stuff doesn't blow up. So you're introducing change. You're introducing a new sort of risk. So it's been a slower process to get sell-side consortia going in the middle and back office. There's certainly been attempts. Client onboarding has been one that's been perpetually discussed. There have been some attempts. It'll be interesting to see if existing consortia like Symphony Communications, which is chat and collaboration, starts to now get into these specific verticals because they have an underlying encryption infrastructure and
that essentially is a consortium.
In a way,
RegTech.
it's RegTech because it's encryption and it's sales and trading. So RegTech is kind of part of it, but it wasn't the driver.
Yep. Good. What about I'm sort of a fintech guy. We're talking a lot about financial services, but I think RegTech compliance transcends outside of financial services. Would you guys agree? Are you seeing things that transcend or companies that can cater both within financial services and much broader? Is that a fair way?
Absolutely. I mean, in addition to vendor compliance, there's also IT compliance. There's a lot of different areas that are being scrutinized that, we all seen all the news on Facebook about data sharing that's a huge issue no one really has a solution for. So we're certainly seeing different pockets outside of just financial. I would argue that AML compliance, client onboarding, and financial compliance, given how much money's involved and how obvious it is when something goes wrong, it's probably the most mature space.
Yeah.
But there's other markets that are just coming out and probably more will come out before that we don't even know about today. One of which is this concept of marketing and brand compliance, which is how we got to know Alex and his team at Performline, because no one's really kind of addressing that point head on.
Good point. Alex, you seeing anything beyond financial services interesting?
Well, we are. I mean, it's interesting. A lot of the compliance solutions, to Daniel's point, a lot of the compliance solutions, have cross-industry applications. If you're building, if you're building a new kind of AML or fraud detection, engine and workflows, that's really to try to detect abnormalities that are occurring in whether it's transaction monitoring or whatnot. That can be applied actually outside just financial services to other clients that are looking for kind of abnormalities in transaction flows. But we see a lot of cross-industry collaboration opportunities on the data management side, on the identity side. And those two really stand out to me as places where some of the financial services designed RegTech solutions can actually be, can lead the way for innovations in compliance in other industries.
Gary, are you guys looking sort of beyond what we think of as traditional financial services?
We are indeed. So NASDAQ, one of our main businesses is actually providing exchange technology to markets around the world. So there's 100 or so markets around the world that currently run on NASDAQ's exchange technology, the matching engine, clearing and settlement systems. And we see a very meaningful opportunity now to expand use of capital markets trading technology beyond financial services into other industry verticals that are facing similar problems. They need price transparency, they need price discovery, they need data liquidity. These are not new problems. These are problems which the capital markets have dealt with and continue to deal with and evolve. But if you're going to start pursuing this kind of markets everywhere theme, it also means that there's a RegTech everywhere theme. So one of the big themes we're seeing is, as has been highlighted by the press in the aftermath of Facebook, is the need for privacy, and how do you actually provide privacy in a trusted manner. And we think there's potential to leverage blockchain technologies and similar technologies, the immutable characteristics of the blockchain, certainly to potentially prove the provenance of the data and also track kind of how it's being used as one example. Could have GDPR applications, things of this nature, but it's still very, still very early, and it's interesting to see how that's going to evolve.
Yeah, Alex or Daniel, have you guys seen sort of blockchain use cases within RegTech broadly?
Oh man, that's probably earlier than where I invest, so maybe I'll let.
Yeah, no, we definitely are. I mean, we're seeing a lot of ideas that we saw maybe 2 or 3 or 4 years ago, kind of conceptually similar ideas. We're now seeing articulated through a blockchain lens. And indeed, in some ways, in some places, actually getting a lot more traction, both on the investor side and on the client side, at least for pilots, by using blockchain.
Can you help us understand some of those use cases?
Yeah, so I actually, goes back to data management side, and so distributed, decentralized data storage and access to data exchange, access to, being able for multiple market participants to be able to exchange data in an encrypted way without a centralized storage of that data for various purposes, whether it's for AI or for fraud detection or whatever. I think that's an interesting place. We're starting to see some blockchain applications. A lot of stuff on the identity side. We're seeing with GDPR compliance and credit risk and identity verification happening over blockchain. So those are 2 areas I think that really stand out. Of course, there's a lot of activity, and I bet Gary would be able to talk more about that, but on the settlement and on kind of clearing side as well.
So are you guys big believers that blockchain will be an important component in this space for years to come, and we're just getting started?
Yeah, I mean, I think we've been cautious. I think we're definitely open to potential applications of blockchain. I don't think we're we're necessarily seeking out only blockchain solutions. And I think we try to look, as we do with most new things, with a cautious eye to how real and necessary the technology is in a particular instance. But we've invested in 3 blockchain related companies, and so I think we'll continue to do so, but try to be honest with ourselves about really how impactful blockchain is, and not get distracted by just by the fact that it's new.
Excellent, excellent. What about just if you're an early stage, you're early stage vendor in the space, and just the whole concept of dealing with sensitive data. How do these an early stage companies get a large organization comfortable in handling PII sensitive data? Any sort of words of wisdom or strategies there?
I mean, it's one of the, going through an MSA, Master Services Agreement process with a large incumbent institution and getting through that process successfully is, one of the biggest risks to early stage companies. A lot of incumbents are less excited about the prospect of having a whole bunch of small vendors, particularly what we've been seeing in terms of data security side. So I think it's an absolutely critical issue to get right. It's not something that you can kind of just leave till the last minute. So we encourage our companies to take information security really seriously. I think that there will be opportunities, though, to my point earlier about it's not necessary anymore when dealing with with data-powered applications to centralize all of that data, to get all of that PII. A lot of times we look for privacy by design type principles in place, data minimization. Really trying to get at the crux of what exactly is the data you need. Do you really need PII, or is some kind of proxy for it sufficient? And for a lot of the new data analysis type companies out there, you actually can often strip out enough of the underlying data to kind of make it not PII and kind of relieve yourself of some of those burdens. But to the extent that they are, it is necessary to be moving or storing PII, obviously that's a huge issue that we really encourage our companies to focus a lot on.
Gary, any words of wisdom?
Yeah, I will. I'll talk my own book. NASDAQ is entrusted with sensitive information by clients all the time, and what we're finding is that there are some RegTech companies that come to us that want to deploy their solutions in the cloud, but need a partner like NASDAQ to provide comfort around precisely these kinds of issues. If you think about it, we're being trusted with all kinds of trade information in a market that's basically an information war where there's lots of sensitivity about front running. and we have a trade surveillance business that is entrusted with that level of data. So that's one of the ways we think we can actually unlock value for RegTech companies as a partner.
Daniel, any thoughts?
I mean, I guess if we were to look at an earlier stage business, the more that you can offload it and outsource it, the better.
Yeah.
Just to focus on what exactly you're doing that's your value add as opposed to focusing on the infrastructure would be my general advice.
Yep. And just as we think about sort of data and the consolidation of data as this industry potentially consolidates, are we going to have big entities that themselves then need to get regulated because of the massive amount of data they have across different companies and different people? Is that anything you're thinking about or worried about in any way, shape, or form? Anybody want to take a shot? Gary, you're smiling.
We're already regulated, so.
Doesn't scare you.
I mean, what we, there already is the ability to regulate companies that are doing business with regulated entities, at least with, certainly on the banking side, with third-party, vendor due diligence requirements, but then also abilities for examiners to actually understand and get into what the vendors are doing in core compliance areas. So we think the hooks are there for it to already be in place. I think that one of the areas that I watch closely and I think is going to be really interesting over the next 5 to 10 years is what is the direction that third-party oversight goes at the federal and state regulatory agencies. Are we moving to a more heavily regulated kind of environment there, or can regulators get comfortable that certain technologies can mitigate the need for regulatory or enable regulatory oversight? But I think it's a key question, and anytime one of our software companies is doing business, or technology companies doing business with a bank, for example, they need to be prepared to be able to speak to the regulators and go through their own due diligence.
Business model question. As you guys are making investments, it seems like a lot of the companies we see in RegTech are more sort of SaaS software companies trying to automate things, but do you guys have an aversion to more of a BPO model, more of a services, human intense component, or are you, only looking at SaaS, for example? Daniel, you want to start?
We certainly think that, especially in these kinds of very sensitive markets, having some sort of services element or some sort of stopgap if something goes off the rails is important. And a lot of the companies we look at in the regulatory compliance sector have that capability. So we're totally fine if someone wants to be both software and services, as long as the services they're providing is not the core product, but really kind of an ancillary solution and add-on.
Alex, do you want to?
I think from our standpoint, we sort of expect RegTech companies to need to have a services component, really to educate. It's still fairly early days in the RegTech space with this wave of innovation, and so we do expect there often needs to be some kind of services component. But again, to Daniel's point, it's really about what's the core product and making sure that it's tailored.
Gary?
I think there's a potential opportunity for a next generation BPO that's going to leverage the automation tools around machine learning, natural language processing that exist in a business that's completely oriented around charging by the head, but where you're actually going to need less and less heads. So if there's an emerging BPO, obviously there's a well-established procurement modality for BPOs. If there's just a BPO that comes in at a disruptive price point because they're leveraging automation in a way that the incumbents are unwilling to do, I think that's quite interesting. So.
Excellent, excellent. Well, in the last 10 minutes here, let's think about sort of, again, more advice we could give, you guys could potentially give to folks in the audience. If you've got early stage companies, how do they get your attention? What can they do to get investor attention? And I know you guys all invest sort of different stages, but what can they be doing? Is it heads down building the business? Should they be at conferences? Do you want them seeking you out? Are you actively seeking them out? Help us understand kind of that whole process from the company perspective, looking potentially for capital. Anybody want to dive in?
I think from our perspective, we do both. Get inbounds and spend time looking at the companies that we've heard about. I mean, I think for us at the early stage, when it's early product days, typically when we invest, There's maybe some sales traction, but not a ton. A lot of it really is about the quality of the team, and does the team have in place a really compelling combination of subject matter expertise in this highly esoteric areas, as well as the technology chops to be able to pull off, developing a serious new, enterprise-grade SaaS product. And so it really is, that a pretty unique combination of those things that we'll be looking for at the stage that we invest.
I think there's a very organic, within financial services, capital markets, there's a very organic sort of filtering process that occurs. If we see an emerging company that actually, at a very early stage, lands a large bank as a customer, that's a huge indicator that for that young company to actually get through the door and win a Citi or a Morgan Stanley as a customer, they must really be doing something right, because it's a little bit, it's a David and Goliath problem in reverse, right? You've got to get through InfoSec. You've got to convince a bunch of risk managers, compliance managers, and tech ops people that this solution is really going to work and it's industrial strength. And you may not have a fully capitalized balance sheet, so there's also this counterparty risk. Those are tough things to overcome. So when we see companies that actually have landed an account like that, it's already very, very interesting to us. And by the same token, if we see a use case for it, so the best filter for me is if somebody in my listing qualifications group or at Smart sees a technology or a business that they think is really additive to what they've got, and they're seeing a lot of vendors just organically in their travels, so they're very informed already. That's a huge indicator that this could be something interesting.
Yeah.
So for us, it's a very organic, natural kind of diligence filtering process through the ecosystem where we know the banks are all our clients, and we know the strategic investment desks, and it's really going to be based on the quality of the solution and the quality of the management team to get through those initial gates.
But from what you said, we see a lot of solutions that may be getting traction with other fintech companies. They're both tech companies, integrate easily. So it may make sense for those companies to really think kind of along your lines of potentially go after that validation from a larger entity, even though it's going to be a longer sales cycle, may ultimately help increase the attractiveness of the entity.
It depends on the solution that you're marketing, and how you prioritize given the resources that you have, right? It's long sales cycles. That's one of the big challenges for an early stage growth company going after banks. Long sales cycles, but once you're in, it's very sticky and it's recurring.
Yeah.
The one advice I'd give, because a lot of our thesis on regulatory technology is insurance focused in the value they're adding, is don't be afraid to price your product like pretty high. I mean, we come across a lot of smaller companies that literally, when we do diligence, the counterparty kind of through a lot of ways mentions that they could double the price and they wouldn't blink because it's solving such an important issue. Now, don't do that for every customer, but in a lot of ways, there's a lot less price sensitivity than you might think if you got something that's really special.
Yeah.
And I think too, just to this point about don't be afraid to ask. A lot of RegTech companies we're seeing are getting, they might get in the door at a large institution, but they get stuck in the kind of the pilot phase of things. And I think trying to master that pilot to production transition is really, really critical. And not being afraid to be like, look, guys, we're not going to keep doing this in a pilot phase. Like, now it's time to move on to production so that you can prioritize your resources, I think is important.
Cool. And actually, Alex, I'll go back to you. Just what's sort of your selling proposition to companies that may have alternative potential sources of capital? What's the value that you bring? And I'll ask each of you that as well.
I'll start. So, I've been a tech entrepreneur, and I've also been a bank regulatory lawyer, investment fund securities lawyer. Been a consultant, and now I'm on the buy side. And so it's really that combination of technology, finance, and policy, and having lived the challenges that some of these companies are trying to solve. I think that's really what we try to do is to bring a federal and state regulatory and legal skill set to our portfolio companies between myself and my partner Raj, who's Raj Date, who started the Consumer Financial Protection Bureau. So I think it really is about trying to help our companies, but both identify the founders that are going to be able to bring to market serious fintech and RegTech solutions, but then also help them see around corners and navigate all of the complexity.
Good. Gary, it's pretty obvious.
Repeat the question.
What's that?
Say the question.
Just as far as the value, that as a corporate VC, the value you could bring to companies, why should they consider taking money from
Distribution,
ventures?
distribution, validation, capital. I think we know a lot about best practice governance. We're good VCs in addition to the strategic value. So we do what a VC would normally do as an investor, and we have an investment process that mirrors what a VC does.
How are you guys measured as far as, are you seeking absolute returns, or can it be more strategic value versus, I think, the other two gentlemen on the panel, it's all about the absolute returns at the end of the day?
Yeah, I think there's a misconception about how strategic investments should work in this regard, and I get asked this question all the time. If something's strategic to us and we can affect the outcome positively, the rate of return we're getting on that investment should actually be higher than what we would get as a pure financial investor. And if we are not demonstrating that, we're not doing our job properly. So those two things should not be, there should not be a tension. They should actually be complementary, and certainly in my former life doing this, that's what we found, is that the rates of return we were able to get on these types of investments were actually higher than we would typically expect to see from I would say, top quartile VC types of returns. If we do our jobs. That's a bold statement, but that was actually the experience we had over 11 years.
Yeah. Daniel, what's the Regal SageMount sort of key selling
Yeah. So,
point?
I mean, it's going to sound pretty generic, but we built a lot of fixed cost infrastructure in our firm. We have a whole team that focuses on portfolio operations. So for our companies, organic growth and sales and marketing best practices are a huge driver of how we drive returns in our companies. We also do a lot of consolidation. So we have a huge M&A team that helps our companies negotiate, close, and integrate companies. In our portfolio of 27, we've done 75 tuck-in acquisitions. So that's a pretty important component. And then on top of that, we have a pretty broad network of executives in a lot of different markets that can actually join our companies full time if they need that. So I think it's a full breadth of basically a growth platform, if you will.
Excellent. We've got basically 1 minute left. Just biggest risks you think for companies in the RegTech space? I mean, it sounds like probably not a demand issue given everything going on, but what keeps you up at night with your portfolio companies that are broadly in the RegTech space? Maybe Gary, we'll start with you and just come right back down the line.
Sales cycle.
Sales
cycle, repeatable. Sales cycle, I guess sales cycle and scalability, repeatability. I think that's the biggest challenge in RegTech, generally speaking, is that.
He took my answer. I would say it's so important. I'm going to say it again instead of making something else up, though. It's really, length of sales cycle is just that's what I think about all the time. Not just in RegTech, but in enterprise software generally, but RegTech particularly.
We're going to be 3 for 3.
Well, I mean, candidly, I just every time we have a new administration change, priorities change. So I'm hoping that in the hold period of whatever investment I made in RegTech stays relevant until I sell the company, and then the regime can change.
Excellent, excellent. Well, with that, I'd like to thank the panelists. Thank you all, and thank you all.
Thanks, Greg.
Yeah.
Thanks.